Welcome to another episode of Onchain Capital, your front row seats to the future of finance. From Web3 innovation and digital asset policies to the power shift between East and West, we're going to unpack it all today with Yo. Yo is a really good friend. He is visiting from Japan. Really glad to be able to do this with him in person. Thank you so much.
Thank you very much for having me today. Thank you.
Yo, so when we first got to know each other, we were very much looking to, I was attending, I think it was Japan FinTech Week.
Yep.
And we were talking about the payment token regulation and a lot of the regulatory frameworks that Japan has been very forthcoming since probably back in 2018 and 2017. And since then, you've done a lot of work, both within your company and also within the broader community. So maybe a quick intro about who you are, what you've gone through, and what do you do at Monex and CoinCheck.
Okay, thank you very much. So my name is Yo Nakagawa. I'm an executive director at Monax Group, which is the ultimate holding company. We also have a crypto intermediary holding company, which is actually a Dutch company, which is also listed on NASDAQ. So I'm also an executive director there. I am basically in charge of the overall strategy. I used to be a lot more involved in investments, but nowadays I'm much more involved in setting strategies and planning businesses for the overall crypto portfolio companies that we have. Today, our crypto businesses we have CoinCheck, which is one of Japan's largest crypto exchange. We have 3iQ, which is a crypto asset management company based in Toronto.
Oh, interesting.
Yes.
Okay.
Of all places, Toronto. And then we have a small staking service provider in Japan called Next Finance Tech, and we have a French prime broker, crypto prime broker called Aplo in Paris. So we do have some global footprint. But our core business is a crypto retail exchange in Japan and a crypto asset management company based in Toronto. But it's based in Toronto. The business is very global. The change in regulation in Japan, crypto regulation, is probably going to be an interesting topic for all of you. So I would like to elaborate on that as we speak today.
Yeah, for sure. So let's dive a little bit into some of the latest in terms of consultation that came from the Japan FSA. So maybe a bit of context. So Japan was, by my count, one of the first jurisdictions in the world to come up with a regulatory framework for crypto assets and payment tokens, or some would call stablecoins. But it took some time before the first live yen-based stablecoin was actually made available, which was late last year. From a fintech company called JPYC. Now, we all know that a number of the larger banks have been working on these projects, probably and hopefully imminently launching these protocols. But one thing that I wanted to touch upon was there was a consultation in January, just last month, around some amendments towards the payment tokens in terms of reserve assets. And also, it seems like the encouragement to have a significant portion of the reserve assets in government-issued bonds. Can you talk a bit about that? Has that always been the plan? Or why are they coming up with a consultation right now, given the fact that the framework's been around for some time?
I think that the initial plan was to have it segregated in a trust bank.
Yes.
I think the consultation may be taking the lead from the Genius Act in the U.S., where, I think in the Genius Act, I think the collateral assets have to be U.S. T-bills.
Yes.
I think they are taking a bit of lead from that. Now, obviously, if you've been following the Japanese fixed income markets, it has come under a lot of pressure. Yields have risen. Remember, not too long ago, 10-year Japanese government yields were zero.
That's right.
Right?
Yes.
Or it dipped below zero for a while. And then today we went up as high as, I think 2.5, 2.7.
Right.
I don't remember the exact number. I think today we're like 2.2, 2.3. So there has been a lot of issuance, or pressure on the government bond side. So there maybe they're using this opportunity to, if there's going to be, like in the US, and if the balance there, people are talking, throwing in numbers like $2 trillion in stable token issuance. I think this is one way to finance the government debt as well.
Interesting. Okay. So taking a page out of what the US is driving, given the passing of the Genius Act last year, and of course, given the tight ties between the US and Japan, that does make a lot of sense from both a trade perspective and also from a political side as well, I would assume.
Yes.
So that's interesting. So that consultation seems like it's a fairly short consultation because I think the closing of that is in February, which is literally in a few weeks. And it looks like then that may be getting ready for the launch of the subsequent bank issued payment tokens, right? So you and I were talking about before some of these larger banks, the MUFGs, the SBIs, that are going down that path. Do you have any visibilities in terms of what they're doing? And also, are you working with them?
So, first of all, as a company that has a crypto exchange, we're not involved in issuance of stable tokens.
Right.
We would be very agnostic in terms of allowing payments in and out using stable tokens. Today, there is a requirement to get the license. We're in the process of getting one.
The license to do what?
To handle stable tokens.
Oh, I see. So that's a separate.
There's a separate license. Yes.
Okay. So even though stable tokens are essentially a digital asset, which you already have the crypto exchange license for,
it requires a different
interesting
license. So so you have the issuance license, and then you've got the distribution license, and this is what we're trying to get. Today, the only stable token there's two stable tokens that are circulating. One is USDC.
Yes.
Obviously, you all know this.
That's right.
And then we've got JPYC. They serve very different purposes, but we have these two tokens. So once whether it's the MUFGs or the SMBCs or the Mizuho stable token comes out, we will be once we have the license, we'll be ready to distribute these tokens. Yes.
And all of the Japanese institutions that you mentioned, they're focusing on yen-based stablecoin, or are they also looking at US dollar?
So,
to the best of your knowledge, obviously.
Yes, my understanding is that it's primarily yen at this moment. Now, I think as on-chain finance develops, I think there will be probably demand from the user side to have stable tokens in other currencies. Because at the moment, let's say you're an importer, right? A big institution, you're an importer, you need dollars to settle.
That's right.
Right. So, would you go to JP Morgan and ask for JP Morgan tokens to be issued? Well, it's much easier to go to Mitsubishi Bank and say, I want dollar
access.
Right.
Yes.
Right. So, I think eventually they would go to that route, but I think initially it'll be yen. But first step yen, and then maybe eventually some other tokens.
Understand. Yes. Okay. So let's talk a bit about. You mentioned USDC. I think it was last year that it was announced
March last year.
Year. So USDC now have circulation in Japan with some fairly specific guidelines around how it's actually being circulated. Can you talk about that as well?
So the Japanese regulators, they put investor protection top priority.
Right. I think most regulators would do that.
And that's the only thing that they care, which is prudent, right? Now, because the issuer of USDC is not a Japanese company, the Japanese company, and because the backing reserves are not custodied in Japan, right? They're in the US. So this was the reason why they imposed a very small limit of 1 million yen, which is just below $7,000 today, for a transaction. That's the upper limit. Now, but in order to do that, initially they required the exchanges to put up the same amount reserve if the customers custody the USDC with the exchange. Now, the problem with that is that the more users have USDCs in the wallet with the custody, then the exchanges have to basically come up with all these reserve, which, I think that, okay, a few $100 is maybe fine, but when you go to the millions of hundreds of millions of dollars, then, it just is not, it's just not sustainable. So, currently, SBI Group is the only company that has the license to circulate stable token, and they're the only ones that are handling USDC at the moment. They have agreed with a trust bank in Japan and with Circle, who's the issuer, to basically move part of the dollar reserve into a Japanese trust bank account, and basically have a tri-party kind of agreement where, in the event of an unlikely event of Circle going bust, that this reserve at the Japanese trust bank account will be used to protect investors.
Got it. And it's onshore.
It is onshore.
So you have full control by the Japanese regulators.
It is basically protected by bankruptcy law in Japan. Yes.
Understand. Okay. And do you see that as potentially other global US dollar players going into Japan? Do you see that as a framework? For others.
Yes, I think that would be the same framework would be applied. Now, is that practical? Maybe not. But at the moment, that is the only way possible to circulate foreign issued stable tokens.
So it's going to be quite interesting to see how, obviously, with the availability now of USDC under the SBI partnership, along with the Japanese financial conglomerates that potentially could be issuing US dollar stables as well, to see how that market is going to shake out, right?
Right. So I think from my knowledge at this point, the three mega banks in Japan stable token project does not envision a B2C use case or C2C use case. It is a B2B use case. It is going to be, whether it's a whitelist system or it's a permission system. It's going to be a very limited use case involved with large enterprises doing global payments. Now, I don't know whether yen is going to be used for global payments, but that is the plan.
But at least in and out of Japan, you will require the yen.
Yes, or within Japan. Yes, that it would be between institutions, not with with retail.
Right.
Now, as a retail exchange, we would love to see retail get involved a lot more with use stable tokens.
Yes.
But we'll see. I think unless you have the product, you can't. Users not going to be able to use it.
Right. That potentially could be where a more fintech player like JPYC can be more direct from a retail use case perspective. I remember meeting the founder just a couple months ago, and he was explaining to me, some of the use cases that he's already exploring with the local pharmacies and whatnot. So there's some interesting use cases. I'm obviously very curious to continue to follow that trend. I think retail usage, especially for Japan, which is such a large economy, right? There must be local usages that can still use a stable token.
Yes.
Because if the stable token is only being used for wholesale and cross-border usage, then it's a very different instrument, right? Than what it's meant to be when it got started from the Web3 side.
Yeah. So I think it's fine that you have two different use cases, one for retail and one for institutions. I think for retail, particularly when we're seeing a huge boom in tourism in Japan.
Right.
I think to have the infrastructure to accept US dollar or whatever stable tokens as payments is one use case.
Yes.
Obviously, you also have a lot more interest in buying these kawaii stuff or manga or anime kind of stuff.
Yes.
Where you have small exporters in Japan it's much easier to settle with stable tokens.
Right.
So I think there are use cases at that level.
Yes.
Now, for the institutional side, I think there is a much different and maybe much more significant use case in terms of how stable tokens play a role in the whole on-chain finance world. Today, for example, like if I'm an institution where I have yen fiat and I want to buy, let's say, U.S. Treasuries, I buy dollar yen first with a bank.
Yes.
And then and then it's in my dollar account at, let's say, J.P. Morgan or Boney, right? And then I ask the money to be moved to my brokerage account, at a securities company, and then I say, okay, buy me Treasuries, and then it comes into my account. So there are so many hops. Now, also the problem is that it settles at different time and different places, right? So the yen settled with my Bank of Japan account or my bank account, and then my dollar, So once you have on-chain, then technically it happens on one layer, right? You have the yen, you buy U.S. Treasuries. So I think these are use cases that technically possible, and I think this is eventually where we're going to go, where it basically reduces friction, efficiency is there, but most importantly, it reduces credit risk, and then it's much more capital efficient.
Maybe that could be one reason based on what you just shared. I recently read that there's a amendment now, a transitional shift for payment tokens going from the Payment Services Act, which has been in place since day one, way back when. And then now they're shifting over to, I think it was called the Financial Instruments and Exchange Act, right? So that clearly is now looking at payment tokens less for only purely payment purposes, but really as a settlement currency for financial products.
Right. I think that when the Japanese regulators designed the initial regulation under the Payments Act, they had to do this. They were rushed to do this because...
Why were they rushed?
Because of the hacking at...
Oh, I see.
At Mt. Gox and then CoinCheck, right? And so the goal was to have a regulation that would protect investors, right? Obviously with fund, segregation requirements and KYC AML and all these things. But also, they didn't want to have a too strict regulation where it would kill the technology or innovation.
Understand.
So it was a very finely balanced regulatory scheme. Now, obviously, back then, people didn't appreciate it as much. But from an insider, I thought it was a very, very well-balanced, well-thought regulation where it did not, it stepped both on the gas and the brake pedal at the same time, but not slamming on it, right? So that was back in 2017-18. Now, fast forward, I think crypto has become much clearly a financial asset or a asset.
Yes. New asset class for sure.
Right. Yeah. And then there's also development on the blockchain side where blockchain as a technology also developing, maybe taking a bit of a different route. But also there was a lot of complaint about how crypto was taxed in Japan.
Yes, right? That is a big deal, right? Yes. I keep hearing about this 55% tax on unrealized gain. Am I correct?
Yes. So, no, this is unrealized gain, not unrealized.
Okay, realized gain. Got it. Okay.
Yes.
But that's still very, very high.
Yes, it's still very high. But, this is a bit overblown because depending on your overall income level, it could be as low as, 10, 15%, or it could be as high as 55%, but it depends on your income level and the amount of profits that you have on your crypto. So it's a little bit overblown, but nevertheless, it is penalizing when if you're at the upper bracket and you're charged 55%, you say well, I would never sell my crypto.
Yes,
right?
or I wouldn't do it in Japan.
Right. So and so there's been a lot of lobbying from the industry, and obviously, I'm sure the investors were behind us. But in the tax code has to be fair. It has to. You just can't say, arbitrarily change the tax code for an asset. So the whole revision of the regulatory scheme for crypto encompassed the tax part, but also the overall regime of how to regulate crypto.
Yes.
And hence, going back to your earlier point of Japan is going to revamp the whole system with crypto being regulated under the Payments Act to become a financial asset under the Financial Instrument and Exchange Act. And then by categorizing financial crypto as a financial instrument, they would then be able to tax crypto at a 20% withholding tax.
Which is similar to the
which is the same as, yes. Yeah. Now, the details in the devil, because even though, let's say, in equities, right, in stocks, if you have a gain in Toyota stocks and you have a loss on Nissan stocks, you can offset this. In the case of crypto, it would be a different asset. It would be taxed at 20%, but you cannot offset your gain
in equities
and a loss on crypto.
Okay, so here's a curveball.
Yes.
What about tokenized securities, if we ever go down that path?
So in Japan, my understanding is that regulation is substance over form. So if you regulate if you create a tokenized share, it would be regarded as shares.
Still shares.
Yes.
Okay. So even
that's my understanding.
Okay.
Yes.
All right. So even though it's living on blockchain, so theoretically behaving more like a tokenized asset,
yes,
rather than traditional, it'll still be considered.
Yes.
Okay.
Yes. And this is, I think I heard that Hong Kong is considering otherwise. That if it's tokenized, it's going to be digital assets.
Correct.
And it's going to be treated separately.
Correct.
And the license
that's
requirement.
That's the plan. Not confirmed yet. Right.
Okay.
That's the plan.
But I think that's an interesting kind of angle. I think that's how, like, let's say Bermuda regulates.
Yeah.
Other countries like the U.S. is saying inequity is inequity.
That's right.
Whether you paint it green or red, it's
still an equity.
It's an equity.
Yes. And very interesting. Okay. So let me double click a little bit on the tax reform. I've heard about this tax reform bill dropping down to 20% for a long time.
Yep.
Has it been passed? Or has it been
debated?
Debated?
We're in the final stretch of passing the legislation through the Congress equivalent.
Yeah.
So the upper house, the lower house. So I think it would be finalized, let's say June of this year. And once it gets, once the law is passed, the revision of the Financial Instrument Exchange Act, then they would, it would come into effect in, I think, April of next year.
Okay.
And because tax is done on a calendar basis, you can't backdate tax.
Oh, interesting. Okay.
So the tax change would happen January of 28. Yes.
Okay. So it's still a little bit.
It's 2 years
away.
Yes, it's 2 years away.
Okay. But at least it's moving forward. There's now a timeline in place.
Yes, and that's very important for Japanese institutions because once they have a timeline, they work backwards and say, okay, we need to decide on these things, 6 months ahead or 12 months ahead.
Right.
So with the change in this regulation, we're having very active dialogues with a lot of financial institutions because they want to understand how they can get involved and make a conscious decision on whether they actually want to do this or not. Right. And a lot of the interest at this point is about doing ETFs in Japan.
Right. There's still no crypto asset-based ETF in Japan at this moment in time. There's
Not
availability of the US ones.
So I think for example, like IBIT,
yes,
it's listed in the US. So it is part of the securities offering or equity offering, but a broker in Japan cannot offer the users in Japan cannot access through Japanese brokers IBIT.
Okay.
No. So there's no access yet.
Not yet. Yes. Okay. So maybe last point that we talk about. So we talk about the regulatory shift, right? And some of the timeline and so. And now, of course, I also read in the news that recently there was a snap election by the new prime minister.
Yes.
And how do you feel in terms of the current administration in Japan, in terms of their willingness to really chart a new course in digital assets? Or are they following the US in that regard? Or are they indifferent? Is it even a big agenda, for example, in Japan amongst all of the world events that are happening, and obviously the domestic issues that need to be resolved?
I think the first thing is that it's always good to have a stable government.
Yes.
Right, because then they won't have to kind of like shift the agenda depending on
and getting things to build stock.
So I think it's a good thing. Now, because in Japan also, the regulators are less politically influenced in a sense.
In what sense?
That
you mean
because
from
there's
a lobbying perspective, as
so
what you would see in the US?
Yeah, so if the government changes, even though the government changes, the regulators will just continue they're very the way they do the job is not going to be influenced because it's one party against the other.
I see. Right? I understand. Okay.
So as we've seen in for example, like the US, where the regulator stands on crypto in the Biden administration versus the Trump administration, it's like drastically changed. Yeah. That is not the case in Japan. Okay. It's much milder. Japan sets an agenda and the regulators work on it.
Got it.
It may be a little bit shorter or longer in terms of time, or maybe it's a priority issue, but they're not going to change, do a 180-degree turn. So having a stable government, and I think it helps. It's moving as planned. They've announced the timeline. So, I don't think there's going to be any surprises coming from the recent election.
So the policies, as I have seen over the last 24 months, it's very progressive. It's moving forward. There are a number of decisions that have been made, as you also shared. And so it sounds like the new administration is just going to keep going in that direction. So really, in summary, Japan is looking at digital asset as a viable asset class.
Yes.
It is something that the market needs. Yes. The market is demanding. And what that means is you need clarity in the regulation, which have been provided for many years, but continuing to be adjusted, revised, as per, I guess, the market conditions and also the geopolitical environments around the world. Right. So that's actually very interesting. So I very often get asked, from my policy advisory role, that is Japan worth spending time in from the perspective of the digital asset industry? Because they when they're looking from afar, there is stability, there is clarity, and there are Japanese companies, large and small, that have been in this space for quite some time. Right. So when you look at the likes of Docomo, and Rakuten, these large conglomerates that are getting into the space, and now, as you mentioned, the financial conglomerates are also getting into it, maybe a slightly different direction, but still moving in this industry. This should be boding well for Japan as a overall, from both an investment and also incubation perspective.
Yes. I think it's going to be interesting times, but also every regulatory change presents a challenge as well as opportunities.
Yes, of course.
It's never good for everybody.
Yes.
Rarely.
Yeah.
And so one of the angles for Japan working on stable tokens is that I think every country is, when you look at the stable token world, it's dollars.
Yes.
Right. And it's a nightmare,
yes.
To have dollarization at the stable token level, and maybe that's an issue.
99%, right?
Right. But at the moment it's contained within the crypto world, so it's not such a big issue. But if it becomes used in mainstream, what do you do with your pricing? Are you going to, are you going to price your cabbage in dollars and yen, right?
Yes.
So that's not going to happen. So I think there is this national security maybe angle to have a viable stable token for every country, so that it does lessen the degree of dollarization, right, on the day-to-day basis. Now, so that's that. I think overall, the opportunity in Japan is going to be bigger than what it used to be, because the only opportunity that you had in blockchain or crypto was an exchange business.
Mm-hmm.
I think going forward, when you have the tokenization of, whether it's equities, bonds, the real world assets, RWAs, I think because you don't do RWA tokenization for the sake of tokenizing it.
Mm-hmm. Yes.
You do this for the network, for the connectivity or compatibility with other networks. So whether one likes it or not, for example, and again, this is a bit contradicting with the dollarization story, but when you have the DTCC and the largest exchanges in the world tokenizing their assets, would it be better to connect to that? Or would it be better to say, okay, we're going to be independent?
Yeah.
Right. So I think these are things that are going through the minds of the Japanese institutions. And I think that's why they would like to understand how these things work. And that's why we're getting a lot of interest from, large financial institutions to kind of understand how these things work. Now, we're recommending that, it would take some time for Japan, because we have this over a year for the legislation to pass and, to come into effect. We're going to help Japanese institutions to, for example, connect to the tokenized RWA world, industry in the U.S. Right. So, for example, if U.S. Treasuries are going to be, the U.S. Treasuries are already tokenized to a certain extent, and there is a very active repo. I think they have over $300 billion transactions a day. We're recommending that. Why don't you test connecting to that system and see how these things work, so that you can basically, have a firsthand feel on how tokenization could change your operations or, your risk management as well. So, there is a lot of opportunity in helping bridge the Japanese and institutions into the tokenized world going forward. So we're very optimistic on the blockchain side.
That's really exciting to hear.
Yes.
I mean, I remember for 2 years in a row now, I've gone to Japan FinTech Week.
Mm-hmm.
I've gone to the WebEx conference, which is usually in the summer timeframe. Very vibrant.
Yep.
And what really interests me the most is hearing the stories from actual local Japanese companies, innovators, founders that are building, rather than the international players coming into Japan to present.
Right.
Obviously, you still have a fair share of that. But there are a lot of local companies, local layer one, Sony releasing their own layer one. So I think there's, to me, it seems like there's a lot more activities. And obviously the regulation's always been in place. So now the two things are in a sense kind of supporting each other.
Yep.
And I think with some of these latest transitional changes, it's only going to make things even better in Japan.
Yes. So it's not as publicized, but the RWA in Japan is actually growing, particularly in the real estate sector.
I remember there was a massive building, like $600 million that was tokenized.
And I think I may be wrong, but I was having a conversation with these companies that are involved in helping tokenizing these things. I think the outstanding balance is north of $5 billion now.
Oh my God!
It doesn't circulate as so. One of the pitch, the story for using tokenized, whatever is that it's going to be easier to transact.
Right.
It doesn't happen.
But
it doesn't happen. But at least there is primary issuance of these things.
Yeah.
And it's set to grow very steadily. I think now, obviously, you have all sorts of, local tweaks to how these technologies perform. But, I think from a pure blockchain point of view, I think the way the blockchain is evolving in these tokenized world in Japan is a little bit kind of like, it's not from a purist point of view. It looks a little bit funny, but it basically tweak the system to comply with existing regulation, particularly the capital requirements aspect. And people don't talk about this often, but when brokers have the private key, and if they have control over it, and if they cannot reverse a transaction, custodying tokens would basically have 100% hit on their capital.
That's right.
No one wants to do that.
That
right?
is true.
Right. So, and it's probably also the case in the U.S. with the tokenized securities, but they basically made it that there's a way to recover. It's a burn and mint thing. A fat finger is not going to be the end of the world.
I see. That's interesting. So actually, that's taking some of the Web3 native kind of fundamentals.
Yes.
And actually bringing it in.
Yes. So it's we're diverging quite a bit in terms of the ethos of crypto, how it started.
Yeah.
I'm not saying it's good or bad, but it's becoming a very different thing.
It's inevitable,
yes.
right? Like we've gone through multiple cycles in the technology phase. Yep. I mean, I remember, the .com phases in the beginning and where versus where it is now. It's completely different, right?
Yep.
So I'm very sure we're going through the same phase right now.
Yep.
The same iteration.
Yep.
Blockchain becomes yet another infrastructure layer, and tokenization becomes a layer on top of blockchain. And then obviously the settlement currencies and all the financial instruments is just yet another layer on top. So, in a few years' time, we might not even be talking about this, right? We're still kind of in that phase.
Yep.
Where we're building and solidifying the concept and solidifying the regulatory framework around them. But I am pretty sure we won't be thinking about this in a few years.
Yep. So I think it's, it is a divergence in terms of the technical details, but it is fundamentally the same technology, the blockchain technologies that is powering, the initial crypto markets, but also that's going to power the next phase of innovation, which is the tokenized, on-chain or digital assets.
Yeah. Yes. That's amazing. We cover so much, Yo.
Yes.
I learned a lot. I always learn a lot talking to you.
Likewise.
Especially on the latest development. So I am hoping that those of you that are here watching this are able to get a sense of where Japan is going, and the optimism that the latest changes are going to bring to the markets. And remember, Japan is not just the Japanese market. Japan is still the fourth largest economy in the world, right? So whatever Japan does, a lot of other Asia economies are going to take notice. And there's going to be a lot of reciprocation. Yes. There's going to be a lot of common understanding, mutual recognitions around some of these policies. So it's very important to understand where Japan is going, and also what are available in Japan today that you can potentially get access to.
Absolutely.
Yo, thank you so much for
your time.
Thank you very much. Yeah, it's really great talking to you.
My pleasure. Thank you very much.
Take care.